All right, good. Well, it's nice to meet you, Geneva, and you're calling from Florida.
Yes,
How
correct.
can I help today?
Yes, so I'm in a situation. I'm a Canadian citizen. I recently went through the E-2 visa, so I just got my visa. So I have a
Mhm.
business in Florida, in United States, and this will be my first, 2022 will be my first year having to file American taxes as well as Canadian taxes. So I just need help with that. And I did get an extension from the IRS, so I have until October to file the American one.
Okay, cool. So in terms of the help that you need, you just need help to file a tax return with my company, or you just need some guidance on specific tax questions?
I have I have zero experience with the American tax system.
Okay, okay,
And then
okay.
also that relationship between the Canadian and the US tax filing in the same year.
Okay. So I'm a US tax expert, so I can only advise you with regards to the US side of things. Um, so basically, since you're on E-2 visa, it's also important to know, you know, when you actually entered into the country. What do you know the specific date you entered in 2022?
So I was going back and forth between Canada and US for the first 4.5 months. And then
Mm-hmm.
I entered May 5th, I believe, of 2022. And I left and I was in the United States the whole time from May 5th until this year, March 31st.
Okay. So meaning that when we even count from May up to December 31st, that
Mm-hmm.
probably means you're going to qualify for, you're going to be here for like 183 days. Is that
Mm-hmm.
correct? Okay.
That
So,
yes.
okay. So I haven't actually looked into the calculation, but let's just assume that if you
Mm-hmm.
qualify under the substantial present test, which means that if you are a foreign person who is on an E-2 visa, we use the substantial present test to see if you qualify as a resident alien under the tax laws here, right?
Mm-hmm.
So if you get to the 183 days or more, you're considered as a U.S. resident alien,
Okay.
and you basically have to pay taxes on your worldwide income. So meaning that income that you make here domestically and an income that you made in a foreign country will be taxed. But the taxation starts from when you actually started your residency, which means that in
Mm-hmm.
May, it starts from May all the way to December 31st. That's what we're going to figure out, what income you made and what
Mm-hmm.
income is going to be taxed.
Okay.
All right. So the question here is, what type of income did you make when you first settled here on E-2 visa in May 2022?
In both countries?
Yeah. So when you entered in May 2022, you earned some income, right? Where did those income came from?
After May?
Yeah, from May to December
Okay.
31st. Yeah.
So it was pretty much only Canadian income because I wasn't allowed to work until later in the year in
Okay.
United States. So my Canadian income consists mainly of rental income.
Okay. Okay. So rental income. So since you moved here from May up to December 31st, you've never done any kind of work, such as being self-employed or receiving any other source of income.
I'll have to look it up a little bit later, but the exact number, but I think I made maybe like $400 in US in December.
Okay. Okay.
That's it.
And what's the source of that income? What is it, like something you did on the side, or what's the
Well,
source?
it was after I got my change of status approved
Mm-hmm.
to actually be able to legally learn income in the United States, and I'm a massage therapist, and I
Mm-hmm.
saw again I have to double check the dates, but it was 2 or 3 patients, and that
Mm-hmm.
was that income.
Okay. Okay, cool. So basically you have rental income and then you have these $400. Now,
Yes.
E-2 visa, right? If it's a non-immigrant business visa, one of the ways you could and it all depends on what you want to do. If you want that rental income in Canada to be taxed here in the US, then there's really nothing special we need to do. You just have to subject yourself under the code to treat you as a resident alien. However,
Okay.
if you do not want that treatment, you do not want your rental income to be taxed here in the US, then you could basically claim the treaty residency test. So in a case where you have actually crossed that 183 days, you could actually say that, look, you're family rooted in Canada than in the US, right? So, but it comes with so many factors, right? We have to figure out what your intention is in the country. If you have any intention to stay, if this place is going to be your permanent residence for the near future, then you cannot, the treaty wouldn't help you much. But if you can prove strong ties to Canada, then the rental income you earn in Canada will be taxed in Canada, because what the treaty will try to do is to place you as a non-resident of US, okay, instead of being a resident of the US, even though you've crossed the 183 threshold. So it all depends on what you want to do. Do you want to be a resident? And can you prove that you have strong ties to Canada than in the US?
For 2022, it makes more sense for me to be a Canadian resident, because even though I spent more time, I passed that time test in the United States. I just got my actual E-2 visa a month ago.
Oh, okay.
So for the year of 2022, so let's say if we were looking from May until November, because I got my change of status in November. So from May until November, I was actually in the United States pretty much on a tourist visa. So that means, no work, no family, no medical, nothing like that. So if anything was to happen, like the pandemic, for example, I would have to go back to Canada. That was my home. I have a business here. I have an apartment here that I owned, that I lived in. My family, my driver's license, my voting records, everything is in Canada. Okay. Now, after the change of status, which was in November, it allowed me to work and earn income in the United States legally. However, the change of status has conditions that if you leave the United States soil, let's say even just going to Bahamas for the day in Florida, you can go for a day trip to Bahamas. Once I leave the United States soil, I lose that change of status, which means that I can come back to the United States, but only on the tourism visa. So again, if anything was to happen, Canada would be my home by default, right? So only now that I actually have the visa, which was approved April 14th of 2023, now when I'm in the United States, so I think for 2023, it could be either mixed or, anything going forward would make sense for me to be an American resident. So that's how I look at it from just, someone that doesn't know anything about taxes. Logically, that's kind of what makes sense to me.
Yeah. I mean, the issue is domicile, right? So when we talk about domicile, we talk about, okay, wherever you expect to return after everything is said and done, right? For example, I live in Colorado. Colorado is my domicile. If I travel to Canada for 1 month, I know that I will return back to Colorado because I have my house here, I have my family here, I have my driver's license, everything. Right? Doesn't matter how long I stay in Canada. I know at the end of the day, I will resort back to Colorado, which is my domicile. Okay.
Yes, exactly.
So if you are saying 2022, based on all the facts and circumstances, Canada is your domicile, then we can claim the tax treaty between Canada and US to state that, look, even though you've passed the 183 day test, you still have more, substantial ties with Canada than in the US for tax year 2022. And then we'll claim the treaty. And basically the only thing that you need to report here will be the $400 that you earn here in the US while you were here as a non-resident, because non-resident are taxed on effectively connected income. And effectively connected income comes about when you yourself have traveled here and does business on this soil and you've earned that income. As for the rental income as a non-resident, because the rental property actually resides in Canada, it's a foreign source rental income, and non-resident are not taxed on foreign source income. Okay.
Okay.
So the only income here we need to report is the $400, right?
Okay.
There are other nuances that we can also talk about in terms of like permanent establishment, because sometimes just because you earn $400 here in the US does not mean that, you know, that's the end of the story. We also have to look at whether the treaty can protect you to the extent that you don't even have to pay taxes on that $400. And that's when, you know, you have, if we determine that you do not have permanent establishment, such as a physical location. So the question is, when you came here, some of the things that establish permanent establishment is like you not staying in the hotel, but rather renting a place to live in physically or buying a house to live in physically. So your living situation could also determine whether you have permanent establishment in the US or not. Okay. Yeah. So it's all based on your facts. So in 2022, when you moved here, where were you staying? Did you rent a place? Did you buy your own house? What was it?
I rented a place. So I had a 1-year lease going from April 1st, 2022 to March 31st, 2023.
Okay. So, I mean, based on this small analysis here, means that the $400 would need to be reported to the US.
Okay.
It cannot escape the US taxes, because
that's fine.
The fact that you've rented a place here kind of shows that you have a permanent establishment, and we're going to report that income.
Okay.
All right. Now let's talk about knowing that you only have to report the 400 and claim a treaty. Let me walk you. I mean, if you want to use my services for tax preparation, you go on my website, you will find, you know, my rates that I charge for tax preparation.
Okay. And then just one more quick question. So, so I would just file my Canadian taxes as normal, right? How I've been doing it, you know, this whole time. Right. And then just file the US taxes separately. Correct. Especially because we're not including the Canadian income for 2022, right?
Correct. Yes. One thing I would also say is that, you know, and I'm saying correct because it's logically that's how I think it should be, but you should definitely check with a Canadian accountant to see, you know, if Canada taxes you, you know, when you are in the US and blah, blah, blah. I mean, the property is in Canada, so I think it will still be taxed in Canada. So yeah. Okay. One thing I want you to also note is that even though there are specific laws in the code which says that even though you've passed the substantial present test, but you still want to be a resident, certain things like the FBAR reporting may apply to you, right? So you would have to report what your bank statement, you know, if at any point in time you have a bank account in Canada and in which the highest amount at any point in 2022 from May up to, you know, December 31st is 10,000 and over, then you have an FBAR filing requirement, even though, you know, those you generally apply to US persons, but there are specific laws that does not make you escape that reporting.
I don't understand what that means.
So US persons are taxed on worldwide income, and they're also required to report certain things on their tax returns, like information return. For example, I'm not sure if you've heard about FBAR. Have you heard about FBAR?
No, I don't even know how to spell that. What is that?
FBAR is foreign bank account reporting. Okay. So whenever a US person has a bank account in a foreign country, we look to see if at any point of the year, the account exceed $10,000, okay? If it's $10,000 or more, then there's a specific form they have to file to report, the details about the bank account and everything. It's just to detect, you know, where US persons are storing their money and all of that. Generally,
what's a US person?
A US person will be, you know, anyone that has passed the substantial present test. In your case, you would have been a US person if you decide not to go with a treaty, okay? A US person can also be a green card holder or a citizen here, okay? So yeah, anytime you are seen as a US person, some really crazy rules in terms of reporting and information reporting applies to you. However, when you're a non-resident, you know, your reporting is minimal because the U.S. does not have so much jurisdiction over you. They have jurisdiction when the income is U.S. source or effectively connected. Okay, yeah. But in this case, when you, even though you are a non-resident per the treaty, the U.S. tax code also states that, look, you did pass the substantial present test, but then, you know, you're claiming the treaty, but that does not take you out of that information report on the FBAR. Okay, so that's something that you also need to be aware of, because if you're non-resident, most non-residents don't want to start reporting anything about themselves back in their country. But,
Yeah.
you know, the situation they fall in, you know, put you into that situation. And I probably, after this call, I will send you the code, okay, that says that even though you claiming the treaty and you're non-resident, you still have to report certain information returns.